Inflation just came in cooler than expected. And for millions of Americans, this could be a much-needed breather. According to a key report released by the Bureau of Labor Statistics, prices rose by just 0.3% in September, putting the annual inflation rate at 3.0%. That number might look small at first glance, but in the world of economic policy and consumer spending, it's a headline that matters. Welcome back to America Today, where we bring you the latest updates from the economy, politics, and culture, all verified, all on time. If you're looking for straight talk on where prices, interest rates, and your money are headed, this is the place. Hit that subscribe button now so you don't miss any of our daily reports. Now let's dive deeper into this long-awaited CPI report. The Consumer Price Index, or CPI, tracks what people pay for goods and services. From groceries and gas to rent and utilities. Economists had predicted inflation would tick up by 0.4% this month and 3.1% over the past year. But this new data showed a slightly better picture, lower than expected in both cases. And while 3% is still above the Federal Reserve's 2% goal, it's significantly lower than what we were facing just 1 year ago. Let's talk core inflation. That's the CPI without food and energy prices, which tend to be more volatile. Core CPI increased just 0.2% in September and remained steady at 3.0% annually. That's down from the 0.3% increases we saw in both July and August. In plain terms, it suggests that underlying inflationary pressures are starting to ease, even if prices are still elevated overall. Now, where exactly are prices going up? And where are they cooling off? Let's start with the biggest mover, gasoline. It jumped 4.1% last month, the largest contributor to inflation in this report. But interestingly, over the past year, gas prices are actually down 0.5%, which shows how much they've bounced around. Food prices were more stable, rising 0.2% in September. But when you look year over year, some categories are still seeing sharp increases. Meat, poultry, fish, and eggs are up 5.2%. Non-alcoholic beverages, up 5.3%. That means for millions of Americans doing their weekly grocery run, the checkout line is still painful, even if inflation has cooled from last year's extremes. Energy overall is up 2.8% over the past 12 months. That includes big spikes in natural gas, up 11.7%, and electricity, up 5.1%. While gas prices dominate headlines, it's these home energy costs, utilities that Americans rely on every day, that are quietly adding pressure to household budgets. And then there's shelter, which makes up about a third of the entire CPI calculation. It only rose 0.2% in September and is up 3.6% year over year. That's slower than before, but still high. If you rent an apartment or recently bought a home, you know that housing affordability remains a massive challenge in the U.S. Let's pivot to vehicles. New car prices were up 0.8%, but used cars and trucks fell 0.4%, continuing a multi-month trend. That's great news for anyone hunting for deals on the secondary market. It's a small but welcome sign that supply chains are healing and that pandemic-era price spikes might finally be coming down to earth. So what does all this mean for markets and policy? Almost immediately after the CPI data was released, stock futures jumped and bond yields dipped slightly. Wall Street sees this report as confirmation that inflation is softening and that the Fed might soon begin easing off the brakes. We're already seeing traders price in a near-certain rate cut of 0.25 percentage points at the Fed's next meeting, bringing the benchmark rate down from its current 4% to 4.25% range. But let's zoom out. This report wasn't just about inflation. It was one of the only pieces of official economic data released during the current government shutdown, because the CPI plays a direct role in determining Social Security's cost of living adjustments. The Bureau of Labor Statistics was legally required to publish it, despite other agencies pausing operations. That makes this CPI report even more important than usual, because it offers the clearest window into the state of the economy at a time when most government dashboards have gone dark. Remember, Social Security, COLA adjustments directly affect benefit checks for more than 70 million Americans. And with inflation at 3%, those adjustments could help cushion seniors and retirees against continued price increases, especially for food, energy, and healthcare. And here's where it really gets interesting. This CPI report is the final major economic data point that the Federal Reserve will have before its next rate decision. The Fed's goal is to keep inflation around 2%. They haven't hit that mark since February 2021, but this latest data suggests we may finally be on the right track. According to market strategist Art Hogan, this report will clearly keep the Fed on track to cut rates. And many analysts agree. But the Fed's job is never simple. Let's not forget, there are still plenty of risks. President Trump's tariff policies could trigger another round of price hikes, especially in industries like apparel, which rose 0.7% in September. And even though job growth has cooled, layoffs remain low, and wage growth continues, creating a complex backdrop for monetary policy. Jerome Powell and his team at the Fed are walking a very narrow path. On one side, they need to tame inflation. On the other, they can't risk slowing the economy so much that it triggers a recession. That's why Powell has repeatedly said the Fed will stay data-dependent, adjusting its strategy based on each new report. Meanwhile, Trump continues to insist inflation is no longer a concern and that the Fed should be cutting rates aggressively. But that view, of course, comes with political motivation as election season approaches. So what's the bottom line? This CPI report shows real progress. Inflation isn't gone, but it's cooling. And that's good news for households, investors, and policymakers. But we're not out of the woods. Core prices remain sticky. Food and energy are still volatile. And political uncertainty could add more complexity in the months ahead. As always, we'll be keeping a close eye on what comes next, especially at the Fed's upcoming meeting, where we'll find out whether a rate cut is finally on the table. If you want more breakdowns like this one, clear, verified, and right to the point, subscribe to America Today now. We cover everything from the economy to politics and sports. And we'll be tracking this inflation story every step of the way. Thanks for watching, and we'll see you in the next update.